All right, Sam back with you here. We are, we're kind of midday, April. Let's see, Tuesday, April 10th, and our second contender today, per the voting that we do, the polling amongst our members, the second contender here is Ripple to the dollar on Bitstamp. So, as is the case with so many of the entire crypto community, we can see here this huge run up we had into the end of the year, and that looks like we peaked just after the first year. So that's January 3rd of 2018, and we can see where we've been in the last 4 months. So it's good to get some perspective. You want to go out to the daily, and just as we did this with Ethereum just a few minutes ago. So it's the same idea here. Okay, where do I have some structural support, potential resistance here, offering support? Well, I'm coming pretty close to that. So I've got a range here. I would, in effect, I wouldn't be trading this as a 1, 2, 3, 4. I just consider this kind of a full round trip. Spike up, we got to what, 335. Now we're all the way back to 50 cents. So what can we build a case down here for this? You can see here we're coming into potentially some low volume nodes here. Again, that's relative to the absolute low to the absolute high. We can see where price acceptance has been. It's the most volume at that price. So so as I would normally do, I'd go for them daily to the 4-hour, as many do. It's nothing unusual about that. So let's just zoom in a little bit and see if there's anything to help us in terms of, okay, where are the algorithms? What are they doing? Where have they been recently? Is there anything that we can do to help identify and qualify a potential pivot low down here that would give us some confidence that if we're not at the low, we're pretty close to it? Well, so first thing, right, we're just going to do as I would with any chart. We're just going to start looking for algo tracks. Well, here's the first one. Here's the 618. Come down, we go literally to the tick, to the algo tick. Do you see that? Do you see that there, what they do? So it's from here to here. Yes, it goes through that, but that's where they take profit, right there at the 23.6, at the negative 23.6. Look at the reaction coming off of that. Now, just because it's a target, because they take profit, doesn't mean that it stops going down there. I want to show you these to you so that you... I guess the idea is to build some confidence in it. So this clearly was an important pivot. So I'd look here, then I'd go to the, this was the last 618. Anything here? Not so much. Anything here? Well, now I might start looking a little bit lower. Well, there's a 50 right there. So if I'm going from swing high here, swing low, here's the 50. They get 2, little reaction at the 23. It looks like they ultimately get their secondary target. So now I'm just going to keep pulling, looking for those relationships. So let me get it on the pivot. We're just trying to identify where they are. Okay, so there's that. That was an important pivot. Well, what do we get here? Do you see that? Right to the golden zone. Right, so you get a combination here. You get the Vegas wave and the golden zone right into the 618. Now, this is why algorithms make so much money. Do you see what they do here? That's their target, the negative 23.6, and then we get the reaction. Now, this is how you identify algorithms that they're involved. It's not here, although into the golden zone. A lot of people don't know that, right? They'll just put their stops. What's happening there? That's people that don't know any better put their stops on the other side of the 618. They get stopped out, and that's often why you see the reaction coming out of the golden zone. Stops are hit, and they rip. Then a lack of buyers, that's what drives it down, and we go right to target. So now they've hit target now, damn near to the tick twice. Right, and those are pretty chunky moves, right? That's from $1.70 to, what do we get down here, to 56 cents. These are not insignificant moves. So here's the tell. It's the reaction off the target. It doesn't mean that means, as I showed you before, it doesn't mean that we must stop going down. It just means that you can identify algorithmic activity here based on the reaction off of the target. So that was important. So we keep measuring. So I know this was a target, so that's important. So I'm going to just keep trying to identify where are they? Where are they? Well, here's a 50. Well, here's their target. So target here now remains unresolved. It has not been reached. So again, just because it's there doesn't mean it must go down there, but you want to be aware of the fact that you've got algorithmic activity all the way down here, and that's a likely target. So if we were trying to look for the the high probability zone for us to see a reaction, it would not be surprising for us to come down a little bit lower, tag that target. You notice right at the point of control here, most amount of volume, most amount of trading at that price point of 23 cents. That doesn't mean we must go down there. It does not. So we're going to look here, see, is there any evidence here that we can build a case for where we are? We know we have that larger target down there, so that's a threat in terms of the market just ultimately selling off until we get there, and then looking for the reaction coming off of that target, as we did here, as we did here, as we did here, those reactions. So potentially that's that, because we're now down back down to what, 25 cents. You know, you're at a place where you might anticipate that if nothing else, people that are not technical are looking at the accumulation here as you can think of it as strong hands taking it from the weak, as strong hands can accumulate down here for the potential for this to re-rally back up and challenge those old highs. May take a while to get there, and we're going to have a lot of resistance along the way. Of course, you're going to have the all the way halfway back. All right, so if we just go to the absolute low, these are going to all be stiff resistance on the way back up. There's 220, 50% is at $1.80. So a lot of resistance to get through, but a lot of things have to happen for us to start moving higher, even challenge those levels. Just it's important to know that they're there. Just because we start moving higher, don't forget to check where that resistance is likely to come in. So from that low, all right, well, so what could we have here from an Elliott perspective? Well, it sure looks like an A, B, C coming into that. So it's hard not to get 5 here. So we can see we get the 1, 2, 3, 4, 5. So this certainly looks like an A wave. That's likely a B. It looks like we finish down here, which would set up a WXY. So that would be the X. Then do we get an ABC? So if that's our ABC, that would be our X. So we'd have to come over here. I'm not sure about this, but that's a contender. And then we come all the way back down here for a Y. Is there an ABC within this? Well, let's dig in and see if we can find something. So does it look more like, because the other contender is that this would be a complex A wave here. So then we get that. This would be our 3 waves into the B. We're not sure. And then is this A, B? It's a little trickier here. So let's look here. So what I can see here, whether this is here or here, likely that would have to be 1, 2, then 1, 2. So I'm going to work from right now. I'm just going to mark this pivot off, since I confess to you I don't work these out, because I want you to go through the process, the evaluation process and the identification process right with me. So that certainly looks like an important pivot. It actually looks to me like I've got a 5-wave structure in there, which would imply a C. So that looks like I might have A, B, C. So I might have a truncated C wave. That actually plays better, because so then actually now I would look at it this way. So then I see from that pivot, it looks like I've got 1, 2, that looks like 3, because that's the deepest retracement for potentially a 4. Now, am I down here, or do I have a 5 down here? Well, so that has me reconsidering this. I'd be more likely to go this way, so I'm going to lower that degree and go to sub-minuet. Let's put that in blue. And then I would go larger degree, because this looks like I'm completing in 5 here, which leans more towards this being a completing C wave. So I'd be inclined to acknowledge the complexity here, but still thinking this as a, yeah, that's not what I want. Hang on, guys. Let's try that again. Let's get an ABC going. So if I'm up here, this would be A, I think that's B, and then we're going down here for C. Let's get that to the appropriate degree. Let's get up to minuet, and we'll just, not that it really matters, but we'll get this up here. So that, I think that's what we've got here. This is A, B coming up into a C. We don't get the high, so I get a truncated C wave there, but that looks to me like what we're playing into. So what's important to us is from this B high moving lower. Okay, so let's dig into that and see if there's anything here that helps us make sense of where we are. So if I look here, I can get a clear 1, 2, 3. I'd want to measure those. So just as I would with any chart looking for 5 waves. I want to see, do I have, so if I look the length of my 1, project from my 2, well, here's my high probability zone right down here with my 1618, 175. I know that's the highest probability for a wave 3. I come just shy of it. But then that, you know, if I'm looking for my 4, that's the deepest retracement. So I'd want to check that. That looks like, so just to be consistent here, I would pull from my 2 to my 3. Just to see. So here we're right in the pocket, right where you'd expect it, between the 23 and the 38, and then we roll down. Looks like we're trying to complete down here. There's a lot of cryptos doing this, just going sideways now. So we don't get great wave structure coming out of these lows as the market is just kind of quiet down here. So does that, let's reevaluate. So it looks like I've got good qualification here for 1, 2, 3, got a little ABC into my 4. So I would want to look for a relationship, again, just trying to build a case. Is there a relationship? Is there any symmetry down here that I can look at and use? So I know common relationships in waves. Take the length of the 1 projected from the 4. So if I pull that over, well, I do get a little confluence zone establishing down here where I've got my 100%, the length of the 1 wave, projected from my 4 wave. So I'm getting a confluence zone down here. All right, so I draw a hot box, as I call them, looking for a potential reaction should we go down that low. Now, we don't know that we do. Now, a note as well that additionally, where I started, I wicked off that potential high, which is coming in splitting. Is that coincidence? Splitting the confluence zone. So I got to go all the way back to show you that one. So that was off of, Jesus, where is it? Got to go way back, all the way back to this pivot high here, right? All the way back to that high, right? So that's why you want to wick those off and have that extend over, because you just never know when that might come into play. So now you look at that in the context of where we might be going down here. And I just, as I will often remind you, just because that target is there doesn't mean we must go down and visit it, but that's something to certainly be aware of. All right, so you put it in that context. So that was a pivot on May 17th of 2017, potentially coming into play here. You know, could damn well be a 1-year round trip before we come back to challenge that potential support, that prior resistance offering that support. So let's just go back down here and dig in here. So now from the 4 hour, I'd go to the 1 hour. Just to see, is there anything I can learn as I dig into that, anything additionally that's of value to me as I come into that potential low. So if I look here, well, if I'm coming down here, so if that's my 4, as I now move to the 60-minute, I'm looking for a 5-wave structure here that would build that, you know, continue to support the idea that I've got a 5-wave structure completing. Now this is uncertain. Is this our 5 here? And now we're starting to move away. It's certainly a contender, certainly a possibility here. So I would likely take that up a degree. Let's go to green. Let's go up a degree. All right, make it fit. So what do we get here? Okay, so now I'm looking, thinking, okay, could that look? It's a short 5, right? So we'd essentially have a truncated 5th. So question mark, you know, it's unusual. It's unusual, but it's not unheard of. We see a lot in crypto. So here is the ideal candidate right down here, where I get that perfect confluence. So we're sitting there at 41 cents. Now, do we get there? You know, I mean, we're potentially here now breaking this pattern, because in effect, if that were to play as a truncated 5th, now we have the potential here for our first, really, so potentially here for a higher low. Right, here's our low, we get a higher low. Could that be the 1-2? It's certainly possible. So let's open that up a little bit and see if we've got anything there. So we put it in this context. Well, I can just look at this. See, that's likely something we have to pay attention to. So I'm going to take that off just so it doesn't get the chart too crowded. So there we come right into the hot box here. So this is just a straight algo swing, high to low, into the hot box here. So sets up the contender down here, right? So this is a contender here off of this algo pull. Swing high, swing low, they sell it. We get the reaction. Now we're not there yet. So what would be confirmation, potential confirmation, that we've got this in as a truncated fifth relative to this third, so that we're completing down here? Because you got to look at that and say, well, there's a couple of scenarios. One is we could be going down to tap these longer term targets. If we were going to, well, then this certainly plays as a potential 1-2, right, into a 3, 4, 5 down here. So that because of the depth of the retracement, if we were going to finish that way, we certainly have a contender here for a 5-wave sequence coming down, because that plays as a 1-2. So, you know, a little early, right, because of the red flag here on the truncated fifth and the, you know, the length of the third, fourth, the fifth relative to the third looks a bit abrupt. So that would look, we'd be heading down this way. So this would all get pushed down here. So if I were, just to show it to you, so if I were to put the wave on that, you can see potentially what we're trying to set up as a roadmap. So that would put us, that we don't know that that goes that deep, that would put us down here as a contender to come all the way down here and complete this. So now let's back out and see if that fits. So we can look here now and say, okay, let me get this up here. So this is actually very, very, very similar to what we're seeing in Bitcoin. It's the potential was there for the low, but given this action here, it sets up the more likely outcome, not the certainty, but the more likely outcome that there's one more drive down. Now, that would not be surprising that if Bitcoin were to do this and finish in a fifth, that we'd get sympathy movement here from Ripple. So potentially you got a 1, 2, 3, 4, 5 sets up down here that completes the whole thing. So what, you know, that we've got this confluence zone here that we've established down here. This plays into it. So it's a bit, would I be a buyer here? No, I would not be a buyer. Not yet. There's no reason to, because if it's going to start moving higher and we get a new trend, there's going to be a 5-wave structure with which we can take the first retracement. So we can let the pivot low confirm. We don't need to try and buy the falling knife. I mean, that's a trend. That's 4 months and 10 days that's been trending lower. Do we need to pick the low? You know, it's the difference of, so what are we sitting here now at 49 cents and potentially down here we're at 37 cents. You know, it's just why? There's no reason to do it. There's no reason to buy, because if it's going to come out of this and we're going to get some sort of an impulsive move coming out of the low, there's inevitably a retracement that we can take that. Now we're buying with more confidence because the market has shown its hand. We've seen a motive wave come out of a potential low. We don't know if it's here. We know we've got a confluence zone here, but if this is going to start to get impulsive and we're going to get potentially a 1-2 and we get a big 3, well, then we can let this thing confirm. No reason to try and pick the absolute low when you've got a market that's trending lower and has been for 4 months. Why? There's so much upside here. Why continue to try and, you know, dick around in here for a couple of cents? There's just no reason to do it. I would let that thing confirm, because we know there's a very reasonable case to suggest that we've got a 5-wave that must complete down here. Right? If this is going to play as a 1, 2, 3, this is our 4 high likelihood. Let me just confirm that for you. So if we go in here, so what do we look for? We look for the relationship of the 2 to the 3, right? We go right, see, it's just textbook. Okay, so here comes our 4 between the 38 and the 50. Yeah, that's a little deeper, but look how far away the 1 wave was. Right, so just out of force of habit, I like to wick these off. So there's my 1, 2. I've got beautiful subdivision in my 3rd. That's all good. Here's my little 3 wave into my 4. This it just doesn't look complete yet. It just doesn't. It looks premature, right? The symmetry's not there. This would actually be ideal. So buyer down here at anywhere in this range. We got all these algo targets at 40 cents down to 36 cents. So it's, you know, it's your call, right? It's always your call. But that certainly is there as a contender. Now, if we get this and that goes impulsive, now we change the story. Now there's an opportunity to buy into the 4 to the 5, and then that finishes, and if you get that, right? So now we'd be looking for a 5-wave structure. If we get that, now we've got an impulsive move coming out of the hole here. So potentially that becomes our low. So this becomes 4, 5, and this goes 1, 2, 3, 4, 5. Well, what do we do then? Right? You know the answer coming. We've got a 5-wave structure. All of this gets set aside. We wait. We go from our absolute low, wherever that is, if it's here, and we go up. We get our 5-wave structure, and then our buy is here between the 50 and the 618. So now you're buying it, call it 57 cents instead of 37 cents. Is that significant? Yeah. But, it's a question of, how do you want to approach the market, right? Do you want to let it confirm and then take the confirming move where we've retraced, or you don't want to try and guess down here? And it's a bit of a guess. My view is, why guess? If I can get more confirmation based on historical patterns that I know repeat and some algo activity, why would I do that? Because I want to try and get the pivot low. That's ego. It's about making money. So how do we do that? How do we do it responsibly? How do we make a business decision? Well, here, maybe, could be. Or, now I can go in with a high degree of confidence knowing that I have probabilities working for me. I have a pattern that I know is prone to repeating. I've got algo activity. I've got all of the things that I look for to set up a trade. Here, you're kind of forcing it. Why do it? All right, guys, I'll wrap there.